Hey all, good morning and welcome to ShareTreck. It's the 26th of July, 2022. Welcome to the morning show, and this is Raj here. And today is going to be a very interesting day, especially after market close, because that's when two of the big results come. But already we have had some major results before the market opens. We'll talk to you about that and what to expect in the week going ahead. Let's get started. So I'd like to start with what's already happened in the morning. So Walmart announced a downward revision of its Q2 EPS by around minus 2%. That's the major takeaway I took from the press release. I looked at the news article in Yahoo and did not see much to worry about. As you can see in the image here, sales growth is better, operating income is up slightly, and second quarter EPS is flat to up slightly. So that's what it looks like. It's been reported that Walmart may announce sales to clear inventory in other places. I've read those kind of news reports, not exactly on Yahoo, but it's been known for a while that that Walmart was planning to do some kind of sales to clear out the inventory. I'm thinking that people stocked up in advance to avoid shortages and are not buying right now. We have reports that the American consumer has more savings going into this recession. If you recollect, Jamie Dimon was talking about the fact that there is much more savings available with the consumer right now, and that was the flavor of all the news 15 days ago. So I don't think that has changed much. I think this is just a blip and may not impact other earnings yet to be announced, like the earnings of Amazon, for example. That's my personal opinion. However, market has already reacted negatively with a drop of 10% before open. And what the market does is what matters, not what I think. But I'm personally of the opinion that Walmart probably overstocked. It probably got inventories late and the inventories were obsolete. Now it has got to do discount sales. This is exactly following the playbook that we heard earlier from our ARK Invest people. And I think that's exactly what is happening right now. On the brighter side, if the Fed is watching what has happened with Walmart and how the market reacted, will they go for a full 100 BPS hike, which is the most extreme, or will they apply the brakes and go for a 50 BPS hike? Well, that's the question that I have in my mind. What do you guys think? Put it in the comments below. Meanwhile, GM was unable to deliver 10,000 vehicles due to parts shortage. Again, a supply chain issue rearing its head. And adjusted earnings per share came in lower at 1.14 versus $1.20 expected. And just to put a contrast there, they made $1.97 in the second quarter of 2021 as compared to what they have done this second quarter, that is 1.14. So it's almost a drop of around close to 73 cents or something of that to that order. That's a big drop. And revenue came in higher. It came in at 35.76 billion versus 33.58 billion expected and 34.17 billion in the second quarter of 2021. That is the same quarter in the previous year. So they have done much well on the revenue side. EBIT adjusted came in at 2.34 billion versus 4.12 billion in second quarter of 2021. So that's a big drop as compared to 2021. So I think the CEO does talk a big game, but we still have to see her deliver on that. They are talking about having secured enough supply chain to be able to produce 1 million EVs by 2025, I think. But the most important thing for them right now is to survive with the ICE engines while they build up their capacity to get into the EV market overall. So in the third quarter, you should expect GM revenues to jump. That is my personal opinion, because they have reported they have around 90,000 incomplete high margin SUVs that will be completed and deliver in the next 2 months. So you expect the margin as well as the revenue to jump in the next quarter. So looking at all of these things, I think the market is overreacting to GM. There will be some corrections back again. It will be moving up again in the next couple of days. So that's my personal opinion when it comes to GM. Now on to the next news item. CNBC reports that Fed may be more aggressive than thought and raise interest rate to 75 basis points. Now, I'm a bit taken aback by this particular headline. It's coming in CNBC. So probably I have missed something somewhere. I was thinking that 75 basis point was already baked in, and that 75 basis point is not going to be considered aggressive. In my books, 100 basis points would be considered aggressive, and 50 basis points most plausible given the weakness in oil, and now the Walmart warning. This also adds to a downward kind of pressure. And I think Fed should be going in more with 50 basis points and at the best 75 basis points. So I don't know why CNBC calls 75 basis point as aggressive, because that was already baked in. With that said, I think we got to go and have a look at what's happening with the price action pre-market, and we'll take it from there. So let's move on to our TradingView platform. Let's get started with our futures out here. Futures are showing negative minus 0.54. We have many times we have recovered from minus 0.54, so I'm just going to consider it to be a wash for the time being. But let's go on and have a look at indicators. So in indicators, let's go to US oil, which is showing surprising strength. It's the second consecutive day of strength for US oil, and it's being constrained by the 9-day exponential moving average, which is sitting at 98.41. Right now we are at 98.39. If we are able to break through that, then our next resistance is going to be this diagonal line of resistance out here, and also the 20-day exponential moving average, which is sitting at 101.13. By the looks of the MACD, it doesn't seem like it's going to break through. Neither does the momentum look like it, but we never know what will happen during the day. Let's watch this after the market open, maybe during the live stream in the evening. We'll check what happened to oil. In all likelihood, it's likely to be pushed down by the 9-day exponential moving average or by the diagonal line of resistance. Next, let's look at QQQ. QQQ is poised on a minor support, which is sitting at 298.09. Right now, we are at 298.94, so we are just a hair breadth away from there. Our MACD is looking bullish. And momentum is pointed downwards. So the momentum is the one that I'm a bit worried about. So if the market continues reacting negatively to Walmart, then we can definitely see ourselves breaking down below this. And then we'll have a support from the 20-day exponential moving average, as well as this horizontal line of support at 292.96. However, currently this minor line of support is also merged along with the 50-day exponential moving average and the 9-day exponential moving average. So it's a very, very strong support out here. Hopefully it holds on. Otherwise, we are in for red day totally. Look at S&P 500. S&P 500 is again down pre-market by minus 0.34. It's at 394.21, whereas we have support from the 50-day exponential moving average, which is at 394.30. That support is available for us. And next, we do have a minor line of support, I would say, out here, which merges along with the 9-day exponential moving average, and which sits at around 392.63, and that's going to be the next support which is available. Right now we are at 394.21, down minus 0.34. As we have seen before, minus 0.34 and minus 0.40 are something that's overcome after market open. So everything now depends on the earnings that are going to come up. And it's going to be much more significant towards the end of the day, because the bigger companies which are going to move the markets are going to report after the close. Therefore, if you are in a situation where you are a bit circumspect about how the results are going to be, it's better to either put a call out there if you get adequate premiums, or maybe sell the holdings, because you're going to have a surprise the next morning. It could be a jump or it could be a drop. Because the market will react post-market, because the earnings are coming post-market. Again, this is my personal opinion, not financial advice. Please think through carefully before executing any trades. Now, let us look at IWM. IWM was up 0.52 yesterday, and today it's down marginally, minus 0.22. Again, it has got support from the 50-day exponential moving average, 9-day exponential moving average, and this diagonal line of support out here, which has been tested multiple times. So this is a very, very strong support we are having here. Momentum is also above average and pointed up. So Russell's is looking much better than the other indices. and seems to be able to weather the storm today. Let us look at Dow Jones Industrial Average. Dow Jones is up 0.28 as of yesterday, and today pre-market it's down minus 0.42, and it still has support from the 50-day exponential moving average, which is sitting at 317.78, whereas pre-market we are down minus 0.42% and sitting at 318.63. The MACD is looking bullish, and also the momentum is also poised in the right direction. So hopefully Dow Jones is also able to fare better. Of all these QQQ, that is Nasdaq seems to be the weakest. And if we look at the VIX, VIX is still sitting in between the range of movement yesterday, and it's up 2.57% from where it opened this morning. I think that VIX is still indecisive. It's actually a small doji. If you look at it, I'm going to expand this further. You can see a very small doji, so there is a lot of indecision out here for VIX. I'm of the opinion that it's going to come down. VIX is likely to come down further as the market weakens here. A put-call ratio ended up at neutral to slightly bearish. And if you look at XLY by XLP, we are risk off. And if you look at the US dollar is starting to test the 9-day exponential moving average. This is not a good sign for us. We need it to go down further and maybe come closer to the 50-day exponential moving average at 12,874. But we'll see what happens during the rest of the day, because the MACD is still bearish. However, the momentum is picking up, and that's the area that I'm very concerned about. And as we know, if US dollar goes up, money is going to be drawn out from other areas like stocks, gold, and other places. So that's what I'm worried about. I'm going to put a new index out here. It is the US 500 index, 500 large cap. So if you look at the US dollar 500 large cap index, and if you look at what's happening out here, yesterday it formed a doji candle, and it was sitting on top of the 50-day exponential moving average, and we have minor support out here, which is sitting at 2037.64, and that's the next level of support, and that's a very strong support because the 9-day exponential moving average also merges with it. We have a bullish MACD, and we have a momentum which is above average and pointed slightly upwards. So I'm thinking that the large caps are going to do very well today compared to what Nasdaq is going to do and what S&P 500 is going to do. So apart from weaknesses for Nasdaq and S&P 500, the rest of the market seems to be better poised to handle the volatility that might come today. And with that said, I think we should go and have a look at the genomics and see where they are pre-market. So if I look at genomics, I'm just going to sort it out so that we have the victors from yesterday on the top. IMTX is on the very top, and it's flat pre-market. Editas has got no trade pre-market. Teladoc is negative 1.38% pre-market. Allogene has got no trades pre-market. Beam is negative minus 3.99% pre-market. Vertex no trades. Pfizer is up 0.19% pre-market. CRISPR Therapeutics is down minus 0.16 pre-market. Intelia no trades. Novartis no trades, and iDNA no trades. Regeneron has got no trades pre-market. Blue is down minus 2.62 pre-market. ArcG has got no trades pre-market. Caribou Biosciences no trades pre-market. Illumina no trades. SQZ no trades. If we look at Novartis, there is no trade. Invitae, it's down minus 2.80%. PSCB no trades. Verve is down minus 2.38%. DNA is down minus 0.36%. So overall, we can see that the genomic sector is looking bearish. So overall, I think we are going to open bearish. What happens next will depend on how the market bounces back from digesting the Walmart news and General Motors news. So we'll have to watch for the market post-market. So when we do our post-market live session today, it will be much more interesting because we'll be actually seeing how the market is reacting to the earnings from the other companies if they declare results before 4:30. Otherwise, we'll check it out tomorrow morning and see what has happened. So with that said, I think I'd like to bring this show to a close for now. I hope you enjoyed this, and just be careful in the market today. There's going to be volatility. Even though I said that the VIX might tend downwards, there's a very good chance that it may go up if people continue to feel bad about the GM and Walmart earnings, in which case it's going to be a red open and red throughout the day. and potentially we are expecting Google and Microsoft to save our day going forward. So with that said, if you like this video, please press a like out there so that YouTube can promote our channel to other users. And if you have not yet subscribed, please subscribe and help us grow this channel. Thanks and have a great day. I'd like to see you at the live stream in the evening at 3:30 p.m. Please join me there and we'll have a lot of fun. And bye for now.